All right, we are one day away from the U.S. presidential election, national elections that we've been waiting for a very long time, that the markets have been looking forward to for a very long time. And we had a little bit of volatility here last week, and that didn't continue today. We had a little that stalled, a little bit of a bounce. I'm going to look at whether or not that bounce was strong enough to reverse the bearishness that we had last week, or what can we expect now going into this election and through the other side on Wednesday. So what kind of days should tomorrow look like, and then what will the rest of the week potentially look like, depending upon how things shake out, what the market's expecting with the different technical patterns that we're seeing. We're going to take a look at what kind of drove the bullishness today, and can we depend upon that? Is that a solid foundation of bullishness, again, to reverse this recent bearishness or not? So I'm going to break that down, and we're going to take a look at a trade idea similar to what we've been looking at before on a stock that doesn't have a whole lot of support below it, and how to trade that. So let's go ahead and get started. Today is Monday, November the 2nd, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, a little bit of an update today turned the moving average yellow, which means, since we're still below it, that it turned up a little bit. And we're getting some up and down, so that's why you're getting, you have as much over the last 30 days, as much up as, prices above it as we do below it. So that's why we're flat. I mean, it's really, really flat right now. Until we really break one way or the other, it's going to stay flat because we've got a nice little sideways range going on here. The intermediate line is still down because we are still below the moving average. The near-term line and momentum lines turned up, but they didn't really, neither one of them hit like strong bullish levels. So, and we did close above Friday's high point, barely, but we closed above Friday's high point, so that's a close above the high of the low day. But I wouldn't put a whole lot of stock into that. Just kind of keep an eye. Like, again, anything right now between this 23 and 78% level is just kind of noise until you break above here, which we had a little false breakout, or you break down below here, and we've had a little bit of a false breakout to the downside with that long lower shadow on Friday. So we'll probably now kind of work our way back up towards, and this will be the key level, is breaking up above that gap that we had. Looks like that would be on Wednesday, that lower gap there. So once we break into that gap, there'll be a lot more bullish. But until then, we're just kind of, noisy, and we'll kind of keep an eye going into next week. I kind of expect that we'll stay noisy until we break one way or the other. And obviously we're leaning towards the downside, so there's a higher probability that we'll break this 23% and hold it before we'll break the 78% and hold it. And of course, I think that's going to be the outcome eventually once we get through this election period. And that's when we'll know that we are like now turning up with dark green shading, and a green line will be headed back up in that direction again. Just not quite there yet. Market sentiment's still falling. Like I said, the intermediate line's still falling, and we don't have the most bullish short-term sentiment yet. Let's look at the Dow. You can see the Dow's got dark pink shading with the red line, with the intermediate line falling below 20. So it's in the lower reversal zone now. Again, not the most bullish short-term sentiment. Your Nasdaq's really, that's the one that's struggling the worst. It's kind of flirting with this 23% level. It was flirting with some negative moves today after a positive start to the day. Short-term sentiment, because of that, has stayed from getting too bearish, so that's actually a good sign. We just haven't, we haven't closed above Friday's high there. And then finally, the Russell 2000, which has been more bullish, you can see it's been holding this 78% retracement of the decline here, this black line. It's been holding that for a little bit of a support. The intermediate line barely dropping below its market sentiment line. And again, it's short-term sentiment rising, but not rising to strong levels yet, so not the most bullish, and coming off of what actually is a pretty bearish short-term sentiment there with that decline. We get this overbought cluster, and just like that, it's pretty bearish short-term sentiment, and the intermediate line's gone from being the reversal zone now to crossing below the 60th percentile and the market sentiment line. So, we're not as bearish. We didn't continue the bearishness from last week today, but we haven't reversed it yet either. at least according to the market forecast. And we'll kind of keep our eyes tomorrow to see what that short-term sentiment ends up looking like. Again, I'm going to venture to guess it's going to be a relatively quiet day in terms of range tomorrow until we get into the future session. That's probably like 2016. That's where the most volatility was, and I expect. Now, keep in mind the rally we had going into 2016 on Monday and Tuesday was because there was decently strong odds for a winner to come out, and then that winner ultimately ended up being somebody different. By the time we came to Tuesday night, that's why you had that big knee-jerk reaction to the downside, because the market was pricing in a different winner on the Monday and the Tuesday. So we'll see if that ends up being the case here, because we don't have a winner. The market's not pricing in a clear winner, not nearly as clear as what we saw in 2016 so far. And that's being reflected in higher volatility, as well as, again, not the biggest bounce today like we saw back then. And even tomorrow, I wouldn't expect us to continue this bounce today. If we do, for a short period, but with a really small range going into, again, tomorrow night, where we'll probably get a pretty decent range. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That lets us know that you liked the video today, and it tells us you want us to do another video again tomorrow. It's a quick way to give us feedback. If you don't like our videos, of course, you don't have to click on anything. You don't even have to watch. But if you do like our videos and you want to let us know, you can do so with one click, right now while you're watching even. Also, while you're down there, comment. What did you get out of our videos today? What questions or comments do you have? What stood out to you? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there, top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos. That's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, we also, if you're watching us on our blog, check out some of these things over here on the right, including our Market Outlook Live video. This is where I review all the trades that we do in these videos. I put on today's trade idea before the market closes, so you kind of get a little preview of that without having to wait until tomorrow's open. So you can get that. Again, all of our Premium and our Plus subscribers get access to our Market Outlook Live videos, as well as all of our trading rooms. Our Premium subscribers get access to other things, other tools and resources here, as well as our communities for each of the class. For example, here's some of the tools, resources that we have. Our charts, our trade alert that we get for Premium subscribers, as well as our registration, where you can be able to register for all the trading rooms at once instead of going to our calendar there one at a time. We also invite you to come over here, click this little heart that opens up a new window, hit that like button there. Also hit this thumbs up icon, it opens up another new window. You can like today's Market Outlook Facebook post as well as tweets. Again, the more you do that, the more likely our content will get to all of our followers because of the engagements it has. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, now let's take a look at the long-term, the weekly chart here. As you can see, it's a pretty bearish candle. It's not a lower low. That's the actual low of the week. So far, it is a lower close, and we're only one day into it, so we'll keep an eye on that. And it is a lower. We do have no upper shadow. Excuse me, no any kind of upper shadow as of right now. You can kind of see where we'd have to get to. 33.99 for that to happen, so we'd have to have a really good run for that to happen. So pretty bearish candle, falling momentum. Again, we talked about the possibility that we'd get another week or two of bearish candles as we come down and flirt more with that 200-day moving average. I still think that's going to be the case. It won't be every down day a down day. Again, don't get wrapped up in the binary world where, when you're bullish, every day's got to be up, and when you're bearish, every day's got to be down. There's going to be up and down days, but that's what this Hakinyashi does. It helps smooth out the up and down days to see, in this case, what more of that weekly longer-term trend is. And you can see, as of right now, it's still relatively bearish. Next week's candle is going to open up at the midpoint of this body, which as of right now would be right around this 33.50 level. So and we're below that. So as of right now, depending upon how we finish and where we finish the week relative to 33.50, we could end up with another bearish candle just like that. So again, keep an eye out on that. Taking a look at the 3 green arrow charts, we obviously have 3 red arrows. That MACD has turned up today, so we did get a little bit of a rally higher finally on the histogram, but we are still well below the moving average there. And the stochastics is also below its moving average and in the reversal zone. The stochastics moving average is headed towards a reversal zone, and then we're below zero there with the 8 and the 17 day now crossing. You can see the rally up to the 8. I mean, your up days will get to the 8 and or the 17. And when you have the up days on the downward trend, the question is whether you can break them and then hold them as we're coming down. You can see it took a while here for us to get through the 8 day, and we actually got through the 8 and the 17 kind of at the same time, but it was flirting with the 17 for a while before finally breaking it there on October 5th and having that little bit of a run. And then we couldn't hold the 8 day. We broke down below it, stayed below it, and broke the 17 day and have stayed below that. And you can kind of see how that trend changes and reverses. Let's take a look at some of these other oscillators here. You can see we're back above 40, so not as bearish, but we're still below this negative 100 level. So still relatively bearish there on those oscillators. You can see from a DMI standpoint, we're still above 30 in the negative. We're still below 20 in the positive with a rising ADX, which means we're getting a strengthening directional move here, even with today's upward move. And you can also see we're, again, still kind of flirting with a moderate bearish trend being below the cloud. See, we weren't below the cloud on this pullback. We are below the cloud now. So that's a much different environment than this original pullback that we had in September. A little bit more bearish from that perspective than we were before. All right, now let's take a look at the intraday chart. And you can see, we had a little bit of a gap this morning that we filled in most of that gap on today's weakness before rallying here at the end. If we can get through this level, there's a pretty decent move that can be had up to this 338 level. And I would venture to guess 338 and a quarter. You're going to be flirting with that 17-day moving average at that point, and a little bit with a 30-day. So there's an opportunity for us to get up to that level there, and that's where that would be breaking through this gap that I mentioned. If we can break through Wednesday's gap this high, then we can be able to fill in the rest of this volume gap and get all the way up. There's going to be pretty significant resistance there, so we're kind of I wouldn't expect us to break through that level. Especially also considering it's the midpoint of the 4-week range, and we've got a pretty bearish pattern here with the high over here on the left and the low now on the right from Friday's move. So that's about as bearish of a pattern that we can get as of right now without setting new lows here later. If you take a look at today's volume at 86 million, the trading range today very small, below the average. I expect very, very similar tomorrow. I could be wrong, of course, but I think that things will stay relatively tight. We'll be probably right in the 5-6 point range. The volume, you see the average volume at 74. So that we're kind of average right now, and we're not really getting a directional big move again because we're in the sideways trend. We're not really getting a big move yet, one way or the other, and of course. Any kind of move we would expect as of right now based on some of these oscillators would be to the downside. VIX is still high. We're still, even though we're in the high 30s, we're still at the 105% mark, which means all eyes are on tomorrow and what happens. And then we'll either have a break up to the upside if the market's concerned about tomorrow's results, or the volatility will drop back down. We'll fill in this gap, get back to the low 30s, and start working our way lower over a longer period of time. I think that eventually will be the case no matter what, whether it starts Wednesday or whether it starts a week or two from now. I think it's more likely it will take some time before the breakdown in volatility starts. Until then, we might stay in this 105, 110% range. I don't expect us to break too hard, at least in close, above 115. It might be 115, flirting with that level, especially considering market sentiment's already almost below 50 on that market forecast chart, the orange dotted line. So I expect volatility to still stay relatively high until we get a firm decision and then the impacts of that decision in terms of stimulus and vaccines and policies but getting a decision will be very, very good for stocks heading into the end of this year. All right, so just to summarize our technical outlook, obviously the markets have been bearish. We've had a week of bearishness. We had a little bit of a bounce today. Again, we haven't been bearish enough to really kind of, establish the intermediate trend. We're close, or we're definitely leaning that direction. But today's bounce hasn't reversed that closeness either. Like, it's more just a kind of an oversold, very short-term oversold technical bounce towards some short-term resistance levels. And if we break, we can go up for a little bit more tomorrow, heading into this event tomorrow night. If we don't, then we can come out of tomorrow with some more weakness following the trend that we've had going into it. So, and that's kind of what I expect. I expect there to be some volatility still left on the table through at least probably the end of this week, if not another week or two after, until we finally get things settling down. So what do you think? Do you agree with that? Do you disagree? Comment down below, especially if you disagree, and share with us what charts or indicators you're looking at that suggest why you're either a lot more bullish than I am or a lot more bearish than I am. All right, so here's that little bounce, as you can see, and puts it in context of the selling that we've had. If you take a look at how things have performed since that October 13th, since the October 12th high point, from October the 13th onwards, again, that's the rally that we've had. So in context of the selling, you can see it's not trend changing in the least bit. But if you take a look at it, just how things have performed here today, just today alone, let's go to a 10-minute chart. You can see, strong real estate moves, strong small caps, commodities did well, and emerging markets outperforming U.S. stocks. Qs were the weakest performer, interestingly enough. Remember, that's the leadership, and it's one thing, for emerging markets to maybe lead, especially with developed markets too, which you wouldn't expect. They're really struggling with lockdowns right now in a lot of those areas. It's not exactly the leadership that we expect that will really kind of hold this move to the upside. If we take a look at how things are performing from an asset class standpoint, you can take a look here. If I can type it in right, let's move my microphone here, but you can see how the euro's maintaining bearishness. In other words, the dollar's maintaining its bullishness, and I expect that will continue at least probably down to this 115.50 area as we maintain more volatility. If you take a look at long-term bonds, they have been bearish. They're still showing dark pink shading and a red line. They're just not like breaking down anymore. In fact, if you notice, market sentiment's actually still falling. It's almost close to falling in the reversal zone itself after getting an oversold cluster, over here. So we'll kind of keep an eye on that 38% Fibonacci retracement level because once you break that, then we can move all the way down to 138.25. And long-term bonds have been so bullish that that's going to be kind of like we probably won't break that until we establish the new bullish trend. Here's gold. Gold's also been on a bearish move because, again, like bonds, have been so overbought. Even before COVID, they were so overbought. And, of course, they maintained their bullishness through COVID and beyond. Haven't really broken down yet. And, again, gold's kind of the same thing. It doesn't have to break down necessarily on an absolute basis. But if you take a look at it here relative to the S&P 500, so this is gold not on an absolute basis, not according to the dollar, but according to stock. So it kind of takes a dollar out of it here, and it's just priced in stocks. And if I take a look at a little longer term view, so I can give you some perspective on that, on the weakness, you can see gold is relatively bullish, but it hasn't really broken out yet either. And when gold does really take off to the upside, that is more of a sign of risk appetite, like risk aversion. So expect that we'll kind of move up a little bit higher towards this 65% level, even relative to stocks, as long as the dollar stays bearish on this long-term trend. In the meantime, though, Until we can really get going, you'll see some strength in gold just simply because of the weakness we're getting right now in the intermediate term. So not the long term, but the intermediate term. And that's a reflection of, again, risk aversion, not so much dollar related, but more risk aversion there. So, but you see a little bit of a pattern here that will lead to a breakout. Again, that means bearish dollar. And if the dollar and gold are both going up, then we know the market's worried about things. But if gold's going up and kind of breaking out here, but the dollar's dropping, then that means that's actually pretty bullish for equities, especially for international equities. And international equities are really starting to show a really nice pattern. They've been so overbought, but you see how their emerging markets are really starting to break out, getting up to a strong RSI here, strong MACD. The PPO is close to crossing below zero, which means you're about to get a golden cross on, we're about to get a golden cross on the MACD and stochastics. So very, very close to, not on the MACD, so the golden cross on the 15-200-day moving averages. Very good sign for international stocks, especially emerging market stocks. They benefit the most from a bearishness or weakness in the dollar. Now let's take a look at how the sectors have performed here today. And again, another one of those signs where it's like, I'm not really buying today's bullishness because it's not the typical leadership of what you'd expect. And if you take a look at just today alone, here's our rally. Energy materials were our big winners. Industrials were up there too. Utilities and real estate outperformed the markets. Our three biggest losers were our three leaders. That's not the most bullish, and I wouldn't expect that to be the most bullish. So again, it's a good bounce. It stopped the bleeding from last week, but it hasn't reversed the trend, and this doesn't support it either. That is not the most bullish sign, and this is more indicative of weakness in the dollar, and they've actually got some room to go. Like especially energy, they've got energy's been so bearish for so long, even just over the last year has been so bearish here, still down 50% on a 1-year basis, whereas technology is up 30%. So it's got some room to go up. Materials has been lagging. Industrials have been lagging. They're starting to gain some traction there, but not over an extended period of time. 1 day, 2 days, get some people chattering about rotation into these new spots, but the reality is no. Like if that's what's leading the market up right now, then I'm not too confident in the bullishness, right? As long as the tech sectors are underperforming in the short term like they are, then I expect more weakness until they start to outperform and resume their leadership role. Then I'll expect that new intermediate trend to run, and I expect them to lead, through a good chunk of that. It doesn't have to lead the whole way, but lead through a good chunk of that new intermediate trend that we eventually will begin. Like I said, most likely going once we get through this result into the end of the year and into next year too. All right, one stock that has just started to roll over here, has been such a strong winner here lately, is Zoom, and Zoom just barely getting dark pink shading in a red line. We did have briefly over here in August a bearish pattern, but you can see how we didn't really get too bearish there on the short-term sentiment, not nearly as much as we've gotten now, and the intermediate line's falling at a pretty decent pace with market sentiment below 80, whereas we weren't really below 80 over there yet by the time we had that pullback. So a little bit more of a bearish pattern that we're seeing. If you take a look at the 2-line versions, obviously we're below the 8 and 17 day, which are both crossing below the 30-day. There's that August move. You see how we were kind of grinding. Not a whole lot of bearish momentum, a lot of bearish momentum this go around. In fact, when you look at like the DMI here, you can see again, we're not above 30. We were kind of trying to break out there, but the ADX was really low. We're not above 30 yet, but the ADX is a lot higher, which means we can expect bigger moves one way or the other. In this case, looking at the Bollinger Bands, there is not a lot of support holding us up. So this is one of those stocks, you can see we're in the lower quartile of the bandwidth. This is one of those stocks where there's, you break through support like we have in the last couple of days. You can see there's nothing nearly as big a volume node until you get all the way down to the value area. Now I don't think it will drop all the way down there, but there's nothing besides this little small area at 400 that could be holding it up going into November expiration. So what we did was we decided, okay, well let's take a look at at buying a put option on that. We'll buy the 410 put going into November expiration, and we'll sell the 400 put to offset the cost. This is what it looks like. Here, I'll get that off there. This is what it looks like. So relatively high probability trade is a 3-to-1 roughly risk reward ratio. We're down a little bit since we got into this trade. That's how much we're down, coming off of the lows late in the day. But then you can see, again, the maximum gain is easily inside of 1 standard deviation. So it doesn't have to make a strong move to the downside. And it will be very easy to keep our losses contained to half of, $280, which would be half of our maximum loss. Even though we position size around maximum loss with a smaller position than normal because of this directional nature, even that we most likely won't take the full maximum loss, because if it really starts to take off to the upside here and break above these moving averages, the 8 or 17 moving averages, then we obviously won't stay in this bearish trade. It's just one of those bearish trades like we've been looking at here to give us something negative delta wise to the downside while the market is going through this bout of volatility, most likely going into November expiration, I expect. And then coming out of expiration, depending upon when and how we get our election results, things will settle down a lot more coming out of that, and we can start looking to be a little bit more directionally bullish to the upside. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread that you want there with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to hit subscribe to our YouTube channel. Hit that thumbs up icon on YouTube as well as on Twitter and Facebook. And comment on our video. Have a great rest of your Monday night, everybody. And we'll see you all next time.